getting stuff ready to go, then it's time to start thinking about how to enter and exit the market, and that's really where AppZones comes into play. Okay, so we want to make sure that as we are looking at the markets, we can understand what price action, what is the market telling us. Okay, so that being said, again, my name is Gabriel Brent, and what we're going to be talking about, and that was a quick picture of me, just so that you could see, just so that it put a quick face with the voice. And what we're going to be talking about is event-based trading. So I am a programmer and a trader, which is kind of a unique thing. But in programming, we do a lot of stuff with events. Like when you click on a button in NinjaTrader, that is an event. And I've kind of come into trading with the same type of analysis and same type of look in our market. So what we're really going to be studying today and taking a deep look at is these events and how they happen. Now, not only do we have trading events, but we also have like trade events. So when you are settling up with the NinjaTrader brokerage, it really comes down to, hey, how did you do over the day? How many wins did you have? How many losses did you have? How big were your runners? How big were your losses? So the funny thing that I really wish somebody would have shown me this at the very beginning of my trading career, but hopefully it is sooner for you than it was for me. But this is probabilities, and the sheer fact of probabilities and how they intertwine with our trading. Okay, so along the top we have the number of losses that you could have. So 2, 3, 4, 5, so on and so forth. Now the sample size is out of 100 trades. Okay, so given your winning percentage of whatever it is, how many losses could you statistically take in a row? Okay, now when we look at this, I think that is really, really interesting and very enlightening on the fact of, maybe you have a strategy that wins 60% of the time, and you've tested this thing out in sim, and you are all ready to go. Well, statistically, you can have 5, 6, 7 losses in a row, but statistically, you're still at 60%. And you've done really nothing wrong whatsoever, but statistically, you could take 7 losses in a row and still be at that 70 or at that 60%. Now, I thought that was really interesting. So, what does that really say about who we are and about what you want to be doing as a trader? Can you handle 7 losses in a row? Can your account handle 7 losses in a row? Well, those are all questions that I'm going to let you decide. But I thought that was extremely interesting because as we look at trading, I think it is all about the events and understanding how the events, how the probabilities, how the price action all play into this wonderful equation. Okay, we're going to see how AppZones also comes in to augment and to supplement a lot of the stuff that you may not be looking at right now. Okay, so let's move on here as far as presentation goes. Now that we've talked a little bit about those trade events, let's talk about market events. All right, what are market events? Any ideas? Anybody have, okay, news. Yes, news would be one. Okay, higher highs, lower lows. Yes, that's correct, and that's exactly what we are going to be getting into here. So, what is a higher high and a lower low? Well, how many people are familiar with that term. If you're familiar with that term, just raise your hand in the go-to meeting, and we'll see that. But everybody here familiar with higher highs and lower lows? Okay. Well, apparently not everybody is. So let's go over that real quick. I don't want to bore the rest of you that are so far ahead, but all right. So you see this low right here? When price goes below this, this is a lower low, and then this would be a lower low. All right. So we're really looking at price action. Now, price doesn't go any lower than this, but you see how it kind of consolidates right around in here? You have a couple, maybe like 3 red bars and maybe 3 green bars, and then it accelerates to the upside. All right. Well, we want to be able to identify that consolidation, okay? Because right now, given what we see on our chart, we don't know why price stopped down here, you know. But we do want to remember when price consolidates, because it seems like price will breathe in and out, you know. Price consolidates and then expands, and then consolidates and then expands, okay? So we want to be recording how the market breathes, because you know what? I've found over the years that history tends to repeat itself. That your history teacher wasn't that dumb. In fact, he was pretty smart when he said, you know, history tends to repeat itself. Well, it sure does, and it's actually repeating itself in our markets, either consciously or subconsciously. These markets tend to do the same things over and over again. And if we can take what we see and understand that, what we're seeing, take what has happened in the past to help us predict what's going to happen now and in the future, I think we have a real edge, don't you? So that's exactly what Apizones does, is it records these consolidation and expansion areas. Okay, it reads the price action, it reads all the market volume, all the big institutions, the swing traders, the day traders, the retirement 401k traders, all those people. Records what they're doing, and it keeps track of this over time so that we can utilize what has happened in the past to help us predict what's going to happen in the future. Okay, so we can really do this in 3 ways. First off, we're going to identify the consolidation. So as price is bouncing back and forth in between these 2 levels, these zones as we like to call it, we can understand context. Now, down below you'll also notice that price, now that we see what these levels are on our chart, we can actually understand why price bounced right here, because look at that, it was touching a level. It was touching one of these historical zones of the market breathing in and out. It's really identifying consolidation. That's what it is. Okay, so we're going to identify consolidation. So as it bounces back and forth throughout time, we're keeping track of that. And the software is powerful enough so that it can keep track for you, and it can draw these levels for you, because every single market breathes differently. All right, and we want to know how your market breathes. How does your time frame breathe? So any market that you can bring into NinjaTrader or TradeStation or Sierra Charts, we can do this for you. Okay, the software can do this for you automatically. Now, yes, this is some pretty heavy lifting, and yes, your computer is going to have to work hard, but that's okay. You know, it's time that it starts paying for itself, right? So, but all of these zones are going to be dynamically set based upon how it reads consolidation. Okay. Now, yes, these zones are adjustable. If you want to adjust them, you can, but I don't recommend it because it does a really good job. All right. So don't go messing with stuff that don't fix things. It's not broken. You know, it just doesn't make sense. You know, let the software do what it does best and let you analyze and trade and make money. which is what you do best. It's a win-win relationship here, okay? Now, obviously, this chart is very, very colorful, too. So let's look at the numbers on the right-hand side of our chart, okay? These numbers are in red, so that means that all those zones are resistance or supply zones, okay? And all the numbers in green represent demand or support, all right? Now, every single one of these zones is going to be a different size, depending upon what market volume, what volatility, what momentum, what price action is telling us at that time, okay? It's just part of it. And yes, support and resistance, supply and demand, I use them all in the same sentence because they are all related. You know, they help us keep track of identifying when price fails to do something or when it does something. Okay, so like when price fails to break this demand down here, we want to record that. So the zone turns from this aqua color to this blue color. Okay, when price fails to break it again, it turns the zone to the yellow color, like up here. When it fails to do it a third time, it turns to this nice purple color. All right, so we keep track of how strong and weak these levels are. In a sense, we're rating them. We have set the bar, and we can keep track of all of these levels, and we can say, hey, not all zones are created equally, so by doing so, we give ourselves a nice matrix of levels, and when we should be watching these levels and when we shouldn't be watching these levels. Okay, so if you're in an uptrend, you expect support levels to stand and resistance levels to break, and vice versa for a downtrend. Okay, and we have ways of defining the trend as well. So it's a whole type of, it's a wonderful conglomeration in our packages that outline all of this stuff together. Okay, but for all you equation buffs out there, here's a nice, neat, simple equation. And I'm going to go pretty fast through all the rest of the stuff just because the NinjaTrader webinar or NinjaTrader section took quite a bit of time. But support and resistance plus time equals supply and demand. Okay, and this is how we add time. How long the zone has lasted on a chart. What time of day price interacts with that zone. And then higher time frame confluence turns support and resistance into supply and demand. All right. So in a sense, we are defining a context of where is high and where is low. All right. And once we have that context defined, then it's a matter of giving ourselves the advantage by taking those levels and trading those levels in the direction of the trend. Okay, so that's what we're looking at doing. Now, in the grand scheme of things, not only did I look at the price zones, but I also looked at time, because let's face it, when your broker gives you market data, he gives you price action data over time. Now, he might give you tick and trim and all kinds of extra little things to put into your trading. And excuse the background noise. But what we're looking at is we're going to be looking at time, okay, the x-axis. So I developed this indicator called the AppATime tool, all right, and what it does is it highlights the top and the bottoms of the hour as well as the first 15 minutes. In a sense, it turns your chart into a nice zebra pattern, okay? So that is what it does. And what we are looking for is for history to repeat itself, just like what we did with the price zones, okay? We are looking for the conscious or subconscious levels to play out over time, all right? So we realize, or I've realized, that we're creatures of habit. We wake up at the same time of day. We eat breakfast and lunch at the same time of day. Well, guess what? Our market tends to do the same type of things at same type of day, either consciously or subconsciously. Maybe the big institutions are all taking their coffee break at the first 15 minutes, so that's why it tends to do something at the first 15 minutes and why we've identified it as such, okay? Why we look for a price to do something dramatic there. Or maybe they all come back from their coffee break at that point. I don't know, you know. I don't care why they are doing what they're doing at these times of day just as much as they are doing these things, subconsciously or consciously. And I think that's really, really cool. And it gives us a lot of power because when we take the price zones and the time zones together, we create this tic-tac-toe pattern. We create a grid system to be trading off of. And the APA community calls it the APA tic-tac-toe methodology. And this is why. Because we are looking to trade only during these times of day. So price zones and time zones coming together, mixed with confirmation of price action, which is represented by these diamonds here, gives us this wonderful, simplistic, and simple method to jump onto the trend. And as you can see in this day, the trend was up. All right. In today's markets, the trend was down. So guess what? It gave us a bunch of really good places to get on board. You know, this is a bigger time frame, and this is the smaller time frame over here on the right-hand side. Okay, so the smaller time frame is our entry charts, and we can see the diamonds popping in here again. Boom, short, boom, short, boom, short, boom, short. You know, it's absolutely awesome to see this stuff playing out again and again. You know, and all we're trying to do is run it with the trend. Now, this is the APA trender on here on our bigger time frame. It helps define our trend, but it is absolutely amazing how it does so. All right. So we want to keep things very, very simplistic, and establishing this grid pattern as such has been working for several years for me, and we've been able to, or I've been able to program it out in a very systematic and logical way so that on our entry charts we can be managing our risk and looking to take our trades from one level to the next level. Okay, so if we're in a downtrend, we would be looking for resistance to hold and support to fail. So if we want to see where previous support levels were, we can show from this drop-down panel, we can turn on and off our zones, as well as we can show what zones were there at the time of day. All right. So right here we know that there was a zone just below us down here, and it already had one bounce. Okay. At least one bounce that we can see at this time. All right, and that could be our target. All right, so if you're getting short where this diamond pops up, your target can be right there, where that zone is that price just bounced off of at the first 15 minutes, and that's the wonderful simplicity that we can get to. All right, and then we can see price stair-stepping its way down, so we can see support becoming resistance, and that flip-flop of support becoming resistance, supply becoming demand. All of that is shown for us with this powerful software, and I just think that's absolutely fantastic. So that is why the software works the way that it was. So all we have to do is define the trend, and once we define the trend, all of this other stuff makes it simple to jump on board. Okay? So, do we know if every single trade is going to work out? Absolutely not. We're playing the probabilities. Remember that first graph that we went to? We're playing the simple probabilities. Now, some of you are probably asking, well, what does the software really look like in real time? And that is a wonderful question. I'm going to actually turn this on to, right now, to a market that is probably moving. So we're going to turn it on to CL, and we're going to put it on a really small tick chart. Okay, just so that we can see zones being created and destroyed in real time. All right. So this is the levels that we have here, and we're just going to be watching them. All right. So you can see how fast they form, and they form in real time, mind you. All right. Because this market just tends to be moving right about now. And usually it'll show some pretty cool things about how fast these levels can pop on your screen. And as soon as price goes all the way through the top of a zone that has the numbers in red, as soon as it goes all the way through that, the zone does become a dead zone. Okay, so it gets put into that old database or that other database of all these levels. Okay, so those are all the dead zones. All right. So I think it's really cool to see when price flip-flops at one particular area, and it just so happens that you can really see these two levels pop through, because it's just very obvious to see how the zones have been reforming right on top of each other, okay, throughout time. I just think that's fantastic to see that stuff happening, to see how market consolidation and expansion is playing out, and how the software is keeping track of all that stuff for us dynamically so that we can play these levels. Okay, now a 10-tick chart is a really, really small chart. It's extremely small, extremely. Okay, so these levels are support and resistance at best, and need to be treated as such. All right, I don't recommend anybody trades off of a 10-tick chart, but we can watch the levels being created and destroyed in real time on here. Okay, so again, what are we keeping track of? We're keeping track of market consolidation. We're keeping track of when the market fails to do something or does something. So when price fails to make a new high up here, we recorded that, okay? And now it's coming back down, all right? Does that make sense to everybody? Okay, good, good. I'm glad that it does. Okay, so now we're going to watch the reaction of price action down here, all right? Does that make sense? And as it came down, we can see that it just formed this new little support, or excuse me, this new little resistance level. You know, after years of doing it, you'd think I would get the right term correct, but I use them so much every day, they just become one and the same. And they really are one and the same, but it's just one is on top and one is on bottom, you know. So we're going to see these levels, and as you can see, these levels being created and destroyed on this very small tick chart here. Okay, you can see the nice pretty bounce that it had on the blue zone, and now that it's turned to yellow, you know. You can even read the really, really small consolidation in between those two levels, you know. So I just think that's really, really awesome to see how that's playing out for us. Okay, so does anybody have any questions? I know that our time together here is pretty limited, so because of that, I want to do a couple different things here. First off, I wanted to talk a little bit about the Apazones community, and when you're seeing the diamonds and the multiple time frames and all of that stuff, we're talking about the methods package in NinjaTrader. Okay, the NinjaTrader version has the elite package. All right, we also have TradeStation and Sierra Charts versions, but the NinjaTrader version by far is the most awesome package there is, just to put it simply. So we really like the NinjaTrader version, and it comes with a whole bunch of tools. A lot of these tools, besides the zones, are there just for defining the trend. Okay, so once you know where low and high is on the charts, let's just say that we're defining low here. and we define high as being up here. Okay. Once you know where low and high is, then it's just a matter of getting on with the trend, right? So what does the trend tell you that you should be doing? Well, that's a good question, because you really only have two decision points, two places where you need to make a choice. So if you're selling up here, this whole zone could be taken as how much risk you're going to be putting on there, all right? And then where do you want to take your target? Right down there at the next zone, and vice versa. You could put it right below this point, or you could put it down below the zone, all right? And then you'd want to take your target at the next zone right up there, all right? So that is how the zones work for both our entry points and our stops. Now, I like to have a little bit of confirmation on all my entries, and with the APA methods package, I've actually built that into the software, so that automatically does that for you. It gives you that risk management piece already built in, all right? So we're going to put the APA methods on here, and it actually has 3 indicators that that we will discuss later on in the packages, and they're all built into one, all right? So once you define trend, these diamonds are going to be making a whole lot of sense, all right? So we can see the green diamonds down here, all right? We can see the red diamonds right there, and price comes down. We can see the green diamond pointing and directing you up to the upside. We can see this red diamond coming back down. We want to make trading and getting into the market as easy as possible, because there's so many different things that you have to consider, or that all the gurus out there will tell you that you have to consider. But just in and of itself, price action is telling us a lot, So we want to be really particular and really focused on just reading the bars, and that's why from this drop-down panel we can show and hide the zones. We can only show the most recent levels too, the zone that's on top and the most recent zone on bottom, so that we really can get a gauge of where are we in the grand scheme of things. Are you in an uptrend or are you in a downtrend? If you're in an uptrend, you want to be buying down here. If you're in a downtrend, you want to be selling up there. But understanding that context is the hardest thing there is to trading, and we want to simplify that process as much as possible. So I hope this all makes sense, and I want to kind of go over some of the pages now. All right, so we talked a little bit about the methods package. We are going to be diving a whole lot more into the methods package in our APA Zones lab. Okay, so the lab is going to be tomorrow morning, and I'm going to invite all of you to come to the lab with me, so that you can see APA Zones work for yourself, in real momentum live market conditions. Okay, we don't want this to be like, oh well, look at how wonderful it is right now. I have no interest in doing that whatsoever. That's we can play the range as well as we can play the trend. It doesn't really matter, all right? All that matters is that you can define the trend and you have a simple way to get in and out, a repeatable, systematic pattern that we can play the probabilities on. And that's really what we can do very, very nicely. Now, if you guys need some help, that's not a problem to understand, because there's a lot to understand. Just in those simple ideas that I laid out, let's buy low when the trend is up and sell high, understanding all that can be complex. Trust me, I've been doing this for years, and I've seen many traders go through. So I want to make sure that things work out well for you. All right. Now, if you want personal hand-holding, if you want somebody that's actually profitable, that's really doing this day in and day out, who's an active trader in the AppleZones community to help you figure out all this stuff, figure out your platform, figure out all kinds of, figure out your ATM strategy, all that kind of stuff. Figure out what type of trader you are. Are you a swing trader? Are you a scalper? How long do you feel comfortable leaving all your contracts out there without taking a profit? How long do you like to trade? And do you really only want to trade a couple hours a day, or do you mind looking at the charts all day? Well, we actually have professional traders in the mentorship program that will help you guys, that will sit down with you. They go through psychological profiles. They go through a trade plan. They build your trade plan for you. They go through sim trades with you. And then we trade live market conditions together. So there's a whole lot of hand-holding. And if you guys need that, we have the APA mentorship program there. It is a one-on-one mentorship, so space is limited, but it is there to help you guys out, okay, if you want to do that. And I recommend, if you're brand new to trading or if you're struggling, please check that out, because it really has helped a lot of people, okay? So let's get into some of the trade plans. Now, as you're building your trade plan, you're more than welcome to go to the trade plans area. Once you become a member, go to the trade plans area and copy my trade plan. I give you permission to copy. Unlike in school, when copying is a bad thing and considered cheating, not so in trading. You can totally copy my trade plan, and in fact, other people have copied my trade plan. Okay, and that's fine. You know, make it your own, and make sure that it lines up with the way that you see the markets and what your risk tolerances are, and the probabilities of everything. But you can totally copy the trade plan and get up and going in as little time as possible. Okay. So these are trade plans from very successful traders that I know of, that have proven it to me day in and day out in the APA community, and they have decided to share this stuff so that it's a community that passes it forward. All right, and as you learn, we would ask that you would share it with other traders as they come into the AppleZones community as well. All right. So amongst the trade plans, we also have a huge video library. Okay. Now these video libraries are composed of our weekly trainings, which many of you may have gotten our Twitter post. Let's go over to Twitter and AppleZones, and you can follow us on Twitter if you like. And you can see all of our little messages on there, and as well as our weekly training emails. Okay, so you can check that out. You can see our swing pub. So we are actively involved in swing trading, futures, Forex, and ETFs in our swing pub, and we do that as a open event every single week. And you can follow this stuff on Twitter, okay? And that is in addition to our every Thursday we have a members training class. If you want to pop in there during 12 o'clock Eastern, all of our events are always at 12 or are always Eastern times. Okay, so you can go ahead and pop in there and ask questions that you may currently have, or if you want to go through the video library and go through our price action school, you can go through exactly how the zones are created and learn how to put it all together and how to use multiple time frames and the wonderful multiple time frames tool that we already have. It's all there. There are several hundreds of hours of training in our video library, and that is there when you become a member. Okay, so I know that we haven't had a whole lot of time today, but I just wanted to open those things up for you guys, and to also give you this wonderful link to our APA Lab tomorrow morning. We call it the lab because, well, we consider this the first training class in your APA career. Okay, and just like in school, there's classes, and then there's classes that have labs, and this just happens to be a very interactive and hopefully highly educational experience. So I'm going to go ahead and link this APA lab to everybody in our little chat window here. All right. Now, if you missed the link, you can go and look at our Twitter page, or if you're getting our weekly emails, it should be in your inbox. But that is for tomorrow morning. We're going to be covering really all the software in the EpiZone packages, so that we can better understand what all the trend follow software is, and how to put it all together into a nice, neat, trending idea, so that we know, should we be taking the red dots or the green dots, or maybe we're in a range, so maybe it's okay to take both. We want to be able to help you with all of that, okay? Because while the software does paint your background, and these dots are very obvious, you still need to know a few things before putting it all together. Okay, so we want to make sure that price action is king, and we know everything about the bars that there is to know. Even the zones are secondary in understanding of what these bars truly mean. The zones are just an extension of what the bars have done previously, as it has tracked volume and momentum of your market throughout time. Okay, so we want to know exactly what we're looking at. We want to understand why price bouncing here on a 60-minute zone. You can see that little 60M right there. The 60-minute level happened, why it came up there, why it's coming back down, what the trend is, all that kind of stuff. We're going to cover that in better detail tomorrow morning. So that class starts at, or that lab starts at 8:30 Eastern Time, and we will be running into live market conditions from there on out. So we hope to see you tomorrow morning, and we hope that today's session has been very enlightening, and that you have been able to see some of the really cool things about the APA zones, about our one-on-one mentorship, and a little bit of the the creation behind the curtain, so to speak, or the magic behind the curtain. So we hope that you will join us tomorrow. And if you guys have any questions, please feel free to ask those. But I will be saying adieu, and we'll see you tomorrow morning. So thank you all for joining me, and we'll see you then. Bye-bye now.